All right. Welcome to Safe Space Finance. Today we have the one and only Emily Lamarsh with us. Yeah. Yeah. Um, Emily, thank you so much for joining the podcast. We're very pleased to have you here. If you don't mind, just maybe give a little bit of an introduction about yourself.
Sure. I'm so happy to be here. I am 41 years old. I live in Washington, D.C. I have two kids. I'm married. My kids are ages 3 and 6. I grew up in Rochester, New York, which is all the way in Western New York, sort of near Canada. My dad was a professor and my mom was a teacher. And so I grew up in a very, middle class life, a very, very middle class city, very working people city. But my family did, greatly value education. My dad working in academia. And my dad's side of his family actually were in finance and banking for many, many years. And so I grew up with like an acute sense of finances and an acute
Mhm.
sense of um, how I would support myself financially as I grew up, and knowing that I may or may not have to do that on my own. And in addition to that, I would say that the way that I was brought up was to always live and behave as if we had way less money than we had, which was never a tremendous amount, but just to live really modestly because it just offers you a lot of freedom and flexibility. And I think I've carried a lot of those lessons into my adulthood.
Wow. That is, I think you might be the first person we've had that had sort of someone in their life at a young age that was like sort of on top of financial education, like understanding
Mhm.
finances in a sort of like a deeper way than just like, watching Motley Fool or something. So that's awesome. I guess when it comes to goals, so some people have life goals, some people have financial goals. Um, do you have any goals for short term, medium term, long term that relate to your finances and achieving those?
Yeah, I do. So, some of my financial goals include my children exiting their undergrad without any college debt. I was very lucky where I did not have any debt from undergrad. And I think that when you are able to start your life without debt, it puts you ahead by leaps and bounds financially in a lot of ways. So I have the financial goal of being able to support my children through their education so that they can exit their with a bachelor's degree with no debt. I also would like to retire between 55 and 60, which is an aggressive, very early age to retire. I think I may continue to work,
Mhm.
but not in the same job that I have now. And I'm lucky where my husband works for the federal government. So as long as he continues to work, we could get health care through his job until he's ready to retire, which I think will be after me.
Wow. Out of curiosity, so the the idea of retiring early, so
Mhm.
like before the traditional retirement age, what prompts that? Is it just because like, hey, I can't continue I can't continue this for the next 30 years, or is it more
Yeah.
like you have an idea of exact like something you want to do?
I
What
think
is it?
it's a little, it's not, it's really neither. I mean, my job is not that hard. It's kind of time consuming, but it's not hard. Like it's not brain surgery. It's not, there's no life or death element to it. I like the people I work with. But for me, life is short. And every phase that you have with your kids or with your loved ones, it's so finite and it's so fleeting. And I want to live in retirement as full as I'm living now, where I want to feel healthy, I want to be active, I want to be able to travel, I want to spend time with the people that I love. Um, if I can hit that goal of retiring between 55 and 60, it would be when my kids are in college and I'll be able to be active in their lives as much as they probably won't want to be active in their lives. Um, and I think why wait? I know a lot of people who say like, oh, I want to do that when I turn 40, or I want to do that when I turn 50, or we're saving that for this special occasion. And to me, like every experience that you have can be special at any stage in life. So if you wait to go to Paris until you retire, that doesn't mean that Paris wouldn't be spectacular if you went now. It wouldn't diminish that at all. So I just believe in, I want to live, I want to enjoy my life, and I want to live kind of a simple, modest life. That's like the goal, but I want to have the financial freedom to just be able to do that. And I think making decisions now to set my family up to be able to do that is key to being able to say, to walk away from a high paying job at a younger age.
Yeah, absolutely.
I
I've,
also have like
yeah.
oh, I'm sorry to cut you off. I also have like a lot of interest in, after I'm done with this first career, I would love to do something in the arts. I'm not artistic at all, but I absolutely love visual art. I love modern art. I love contemporary art. So I would love
Yeah.
to work in a gallery. I would love to even volunteer. I would love to work at a framing shop. I would love to do something as it
Yeah.
relates to art.
Yeah. That's awesome. I've tried to think about sort of this whole thing as well, and it's weird because on the one hand, I hear a lot of people saying, "Oh, well, you can't just become a couch potato, right?" Because then
Yeah.
you have that sort of like, "Uh-oh, you start to decline faster and mentally, physically,
Yeah.
all that jazz." But it is a struggle for me to think about like exactly what I would do, only because I feel like I've been, sort of like a cog for so long. So I
Oh
got
God, Mike,
to
you
reprogram
would
and figure it out.
you would do amazing things. You would do so many creative, awesome things. The thing is, like, I think that as Americans, we're very programmed to think that like our worth and our value is aligned to our productivity at work, and it's
Mm-hmm.
just like so false. I mean,
Mm-hmm. Mm-hmm.
I I am I hope good at my job. I think I might be good at my job. But it's so reductive to just be that, and I feel sorry and bad for people who are like afraid to retire because they're
Mm-hmm.
like, what if I drop dead the next day and that's my life? It's like, no, 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 you have so much more to live for. So,
Yeah. Yeah.
I would think like, I mean, I definitely married for love. Like, I for
Mm-hmm.
sure married for love.
Mm-hmm.
Um, but if I had married somebody and they had a lot of money, I would definitely not work. I
Yeah.
love not working. I'm great at not
You
working.
can find some things to do.
Yeah, 100%.
Fair enough. Okay. All right. So let me ask you this. So you are married and you've got kids. When it comes to finances, just your financial universe with you and your husband, when it comes to bank accounts, when it comes to investment accounts, how do you describe the sort of jointness versus separation of accounts in your life?
Um, so I think we're on one end of the spectrum where we have combined finances in almost every respect. So we have one shared credit card, that we both use. We have combined bank accounts, and we made that decision pretty early into our marriage because there was an earnings disparity between us, and we didn't want that to impact how we lived or how we spent money. And so we decided to combine all of our finances. And then once we had children, it just made all the sense in the world to have combined finances, to pay for childcare, to pay for living expenses, to pay for everything. So we share all of our finances. The things that are separate for us, our retirement accounts are separate, obviously, because they're through our employers. And then I came into the marriage with, some of my own personal investments, and
Mm-hmm.
those have remained separate.
Mm-hmm.
He's a beneficiary on those, which, of course, if I pass, they go to him. And if he passes, they go to our children. But in terms of day to day access and management of those funds, that is through me.
So it sounds like you sort of even have an idea for what happens if kind of scenarios in terms of like
Mm-hmm.
health and all that kind of stuff. So have you set up a trust or a will or both for your family in terms of your financial situation?
Yeah, we've set up both. when our kids were really young, and they're still quite young, it was sort of peak COVID, and we had, I think, all a heightened sense of mortality, and also it was just time. You know, we had two kids, we have a lot of assets, we have homes, and we wanted everything to be on paper and in writing, and we wanted to be able to have have a conversation that was sort of forced by the act of doing
Mm-hmm.
of making a will and having a trust. And you know, I grew up where my mom passed away when I was pretty young, and she was sick from the time I was pretty young. And so I know that, you know, good things can happen, bad things can happen to good people, and people can get sick. And so I've always been very, very um, a little bit worst case scenario about death and dying, and it's just a result of my own human experience. And so I think for my husband, who has lost very few people in his life, he lost his great grandmother when she was 101 years old. He lost his great aunt when she was like 95 years old, but he hasn't had a lot of unexpected loss.
Mm-hmm.
I think for him, he wasn't as interested in talking about like the what if scenarios. You know, what if we both die? Where do our kids go? What if one of us dies and one of us is incapacitated? You know, like what happens to our kids? But for me, I needed to have that to feel like I had done my part as being a parent and
Mm-hmm.
created my own wishes in writing, or our
Mm-hmm.
own wishes in writing, so that people would know how to execute against, you know, the worst case scenario. So we do have a will, we do have a trust for our kids. Um, and the goal is that we'll never have to exercise any of it, that we'll live nice, long, healthy lives, and our
Yeah.
kids will grow
Yeah.
up and all that.
Yeah. And just so when you set that up, because like
Mhm.
it's honestly something that we're thinking about setting up now. Um, you know, we've sort of looked at the cost. It's like, wow, it's pretty expensive to go hire an attorney to get that
Yeah.
done. Looked at some other services like Trust and Will, LegalZoom, but just so you know, people know, how did you get yours set up?
Sure. So the company that I work for offers a legal plan, and it's at a very low cost. It's either $10 a month or $12 a month or per paycheck.
Mm-hmm.
And it is very easy to opt in, and it's very easy to opt out annually. So I opted into our legal plan just as an extra measure of protection for my family, and we use that to get our will and our trust drafted and notarized and all of that. And we paid nothing out of pocket for it, but I know it can be really expensive. I mean, attorneys' fees are it's like no joke. It's hundreds of dollars an
Yeah.
hour.
Yeah.
And so I would, and I know so many people who have used online services that give you effectively the same documentation for a fraction of the cost. And so I
Mm-hmm.
would say look into, if you're lucky enough to have an employer that may offer that benefit, look into that and see if you can opt in for a year and just get it done, or look into an online service.
Yeah, I mean, I think that's an incredible tip. Like, I, I think maybe even I've seen those legal things, and I'm like, what is that? Who uses that? Like, who buys into those things? But
This guy.
now it's now it makes a lot more sense. So it's something I'm definitely looking into after this.
And
Um,
most companies will have an opt-in. You'll have a an open enrollment period, right?
mm-hmm,
And
mm-hmm.
so that's the point where you can enroll, and then you just have to. It's like a Netflix subscription, right? Like if you're not using it, you have to remember to like
Turn it
end
off.
your subscription.
Turn it off. Yeah,
But
yeah.
I'm like a psycho, and I put calendar invites in. I add calendar invites for like when subscriptions are going to start charging me more, or when I need to end my subscription, or when
Mm-hmm.
I need to call a company to renegotiate like my annual fee or my like monthly fee.
Sure. Yeah.
It's,
Yeah.
it's
No,
crazy, but it's
I
part
think
of my
that's
life.
great. That's great. You're on top of it, and
Oh.
that's the way I should be. um, okay, so let's talk about emergency funds. So, what is your emergency fund situation looking like? How many sort of months of coverage would you say you have? What's it invested in? If it's invested, or is it sort of just in cash? Can you talk about that a little bit?
Sure, yeah. So emergency funds are kind of I feel like so important for everybody to have and for everybody to have a contingency plan. And I always like to say, like, my plan A is spectacular, my plan B is okay, and my plan C is terrible. But you need all of them. So, for our family, and we have a family of four, we live in an expensive area. I feel comfortable. We feel comfortable as a family if we have about $10,000 in cash, um, in, checkings or savings,
Hmm.
like available, not going toward the mortgage, not going toward, like above and beyond what we would need, just in case
Yeah.
there's a car issue or
Yeah.
whatever. And then within my own investment portfolio, we have a couple of years of funds that we could live off of to cover all of our basic bills, our mortgage, our taxes, our utilities, food,
Hmm.
shelter,
Hmm. Hmm.
for a couple of years. I would say 2 to 3 years comfortably, without eating into or eroding our retirement funds.
Hmm.
But ideally, we'd want to continue to grow all of those investments. So the plan is that neither of us lose our jobs.
Right.
Although, interestingly enough, my husband works for the federal government, and they were, the shutdown was,
Yeah.
imminent a week
Yeah.
and a half ago or whenever. Um, and I felt so lucky and so privileged to know that if my husband went without pay for a couple of weeks or a month, that we would be fine. And
Yeah.
that we would, of course, be able to meet all of our lifestyle demands, to meet
Yeah.
all of our payments. And it made me feel so sorry for those individuals who, can't. It's that's got to be a scary thing. So
Yeah, for sure. So it sounds like you have a big leap. Like you have sort of like you get 10,000 cold hard cash, and then you've got like, wow, you're down in that whiskey.
I
Yeah.
don't know. We've been on this call a long time.
Have we?
It's 35 minutes. I don't think a drink is that much.
um, all right. So you got your $10,000 cold hard cash, and then
Hmm.
there's no sort of like middle ground where it's like, oh, we got a high yield savings account, or we got, some T bills, we got some bonds for like medium term money. It's sort of like you go from $10,000 cold hard cash to like everything in long term investments that can be used either for
Yeah.
sort of withdrawals as needed or
Yeah.
retirement ultimately.
Yeah. Yeah.
Sounds
I
right?
think so. I think
Okay.
that's right. I do have, you may have to edit this out. I do have a store of physical silver and gold, but those are hidden in a place that nobody could ever find.
Fair
And
enough.
like, it's because I was raised by people that, took finances very seriously
Uh-huh. Uh-huh.
and understood money, and basically, like when the economy collapses, which has happened,
Mm-hmm.
not within our lifetime, like a true collapse, but it
Mm-hmm.
happened a lot, like in my
Mm-hmm.
great
Mm-hmm.
grandfather's time, and they
Mm-hmm.
were all in banking. Um, Gold and silver always carry value.
Yeah.
That becomes what I mean. Paper money goes away, and that becomes the commodity. And so, I do have, if an Armageddon, if worst case scenario, I do have physical silver and physical gold.
Wow. Okay. I love that. You might be the first person I've met that
It's
has
so
physical
crazy. I
silver
don't
and
even know
gold.
if I should say that. I mean, they're not in Washington, D.C. But if you wanted to draw me a map for like a crazy amount of money, I would totally do it.
All right. So do you dabble in real estate as a form of wealth building? Like you'd mentioned some
No,
properties. Do you?
I dabble in like the opposite of real estate, which is like I own a lot of properties and they all are sucking money from me. So, like, to explain my real estate portfolio, so my husband and I own our house in Washington, D.C.
Uh-huh.
We have a mortgage on this house, which is advantageous to us from a tax perspective. Also, it's very difficult to buy a house in cash in DC, although a lot of people have done it and continue to do it. But so we have a house here. I have a cottage that I bought when I was in my late 20s that's in Illinois. Um, there is not a mortgage on that property, but the monthly assessment fee on that property is about $700 a month. And that includes my taxes and most of my utilities. It does not include internet, but other than that, it includes the utilities. That is a seasonal home, so we're only really able to inhabit it from late spring until early fall. Um, and then my sister and I co-own the house that we grew up in Rochester, New York, which is a really beautiful city and a really wonderful place.
Hmm.
And our house there is lovely. The value of the house is much lower than the value of our house in Washington, D.C., but the taxes are like twice as much. The
Oh
New
yeah, the
York State
taxes in New
taxes.
York are just absurd. Yeah.
I mean, it is. I mean, I think you get a lot for that, but we don't live there. So we
Well,
are
I was
paying the
yeah, I was kind
taxes.
of gonna ask, like, so you've got three properties. You've
Yeah.
got your mainstay in DC where you live and
Mhm.
work, and everybody kind of
Yeah.
has their orbit there. And then you've got these other two properties.
Hmm.
The cottage sounds like ideal. It's like you got a place to escape, and I'm
Yeah.
imagining that's what it's used for. It like what was the thought behind the cottage? Did you buy that? Like you said, you bought it in
Yeah.
your 20s.
Yeah. So it's a family home that my grandparents owned and that my dad owned. And when I was in college, my dad sold it. And this is a cottage that is in a small community, but the community offers a lot of amenities. So the reason why our assessment fee monthly is so high is that during the summer season, there are children's events and tennis and a beautiful pool and educational events. And I go to a card party once a week where I play bridge, which shout out if anybody wants to play bridge. I'm like working on my game. Uh, it's a thing that I'm doing. Um, so this summer community we were a part of for my entire childhood. And because my dad was a professor and my mom was a teacher, we were able to spend the entire summer there.
Hmm.
When I was in college, my dad sold what I would consider like an ancestral home, like someplace that we have multiple generations, so many memories. I was baptized in this community and we're not Christian at all now, but
Hmm.
like we have just a lot of memories in this community.
Hmm.
So my dad sold our cottage. I like never got over it. I never it was always I would it was always like a hole in my heart. And
Mm.
when within this community, there are only 127 cottages, and most of them are in families for generations.
Wow.
So my dad sold our cottage to a family that I knew, because we're all like in the same community.
Fair enough.
And they owned it for about 5 or 6 years, and they did a lot of renovations, and they had to sell it for their own reasons.
Mm.
They had a growing family. They had 4 kids. Our cottage is like a pretty small cottage. And so they reached out to me first before they put it on the market.
Oh
And the
wow.
market's like very insular. And they said, we have to sell the cottage. We would love for you to buy it instead of anyone else in the entire world. They're like, we would love for you to be back in your family's home, and we're happy to work with you to like make that happen.
Wow.
Yeah, and I was 28. I was very young. And I was working on a commercial project. So I was in New York City during the week and in DC on the weekends. And I knew in my heart that like it didn't make sense, but I also knew in my heart I had to buy it
Mm.
because I was never going to have this opportunity to be back in the cottage that my grandparents owned, that we had so
Mhm.
much history in. So I pulled together at that time $55,000 cash, which is like a tremendous amount of money for somebody who's 28 years old.
Mhm. Mhm.
And my sister helped me. Um, my sister's 2 years older than me, and we bought this cottage back, and it has been so amazing to have because it's almost like I bought this place before I met my husband, before I had children, before I knew the life that I would have.
Mhm.
And now that we have children and that we have this life, it is the perfect place for me to raise my kids in the summer. and the perfect balance between our life in DC, and which is a little bit chaotic and very
Mm-hmm.
urban because we live
Mm-hmm.
in the city, and a really kind of calm pastoral life. So
Yeah.
it wound up being a good choice overall. But at 28, like, this is a financial podcast. What I would say is, like, if you're 28 years old and you don't even own your forever home, do not buy a second home in Illinois, in any place that's a different time zone. It's like not the move. So like that's very much an emotional investment. And then our house in New York is our childhood home. I mentioned that my mom passed away when I was young, and so
Mm-hmm.
so much of my sister and I, and my sister's my best friend, and so much of what we are doing with our kids is trying to keep like my mom's memory alive and her spirit alive and
Mm-hmm.
impart that on our children.
Mm-hmm.
And my sister also lives abroad. She lived in Turkey for years, and now she lives in the Netherlands.
Mm.
And so because of that, she wants a home base in the US, and that home base to her is Rochester. So we kept that house.
That's amazing. Okay,
Yeah.
so every property serves a purpose, but
Yeah.
they're not necessarily a financial purpose. Like these are
Yeah.
more emotional
Absolutely.
investments and things that are contributing to your quality of life,
Which
which I
are
think is cool.
investments, right? Like, it's
Yeah,
emotional investments are investments.
yeah,
And we're we're better off having them than not, I think. So
sure. So, speaking of investments, you are someone that uses a financial advisor, like a
yeah.
human being. We just actually had a guest on who uses Wealthfront, which is like a robo
Mhm.
advisor. Um, I am very curious to learn about your setup there, but I do want to take it back. So, can you just explain how you even got started with a
Mhm.
financial advisor?
Yeah, I feel like I'm talking a lot, so do you think I'm talking too much?
You're here to talk. So
Okay.
if I just talked the whole time, it wouldn't be a
Okay.
podcast where I'm interviewing people.
All right. So I had uh so the history of me having a financial advisor. My mom passed away when I was pretty young. She, through her estate and through her parents, left my sister and I a considerable amount of money. She left
Mm-hmm.
us equal amounts.
Mm-hmm.
My dad and my uncle for many years. So my dad and my mom's brother for many, many years managed those funds for us because we were young, we were minors, and there were
Mm-hmm.
stipulations in the trust that we could only have access to a certain portion of the funds at a certain age, and that we could only have like agency over those funds at a certain age. And through a lot of decisions that I had no visibility on from the time I was about, I don't know, like 10 to 25,
Mm-hmm.
those those assets depreciated like incredibly. There were just a lot of bad investments that were made.
Oh
And it
no.
was not necessarily because my dad or my uncle were trying to like swindle me. It was
Sure.
because they made, bad investments on our behalf. And when I developed an understanding of what had happened and of the portfolio that I could have versus the portfolio that I had, I was like, I I have to be in control of this. And
Mm-hmm.
one of the stipulations of the trust was that I had to be 25 and have a college degree to have full control. And if I didn't have a college degree, it was like 35 or something. There was something weird, but I'm like, look, I've hit all of the things.
Wow. So you wait. So
I,
your trust was set up such that like those were sort of the requirements. Like your
yes.
parents said, we're going to set this up. You're going to have this account. It's not
Hmm.
custodial because you're not
Correct.
going to get it when you're 18. It's just a general account that we're
Hmm.
putting in this trust, and you have to you have to reach these things in your
These
life, like
milestones.
these
Yeah.
milestones. Okay, got it.
And you can set up trusts like that, like however you want.
Mm-hmm.
And there are a lot of kind of like standards that are set, but generally, like, if you want it to be like, you have to graduate college, be married to somebody, you need to be married in a heterosexual relationship,
Oh
you need
my
to have a
God.
job at a top four company or whatever. You
Yeah.
can stipulate that. And if that individual doesn't meet those requirements, they can of course sue the trust, but it's not worth it. So
Yeah.
it is a very it gives the person who has the money all the control in the world in terms of how they want it to
Mm-hmm.
be distributed.
Mm-hmm.
And it's also in another way, a nice way and a safe way to protect those funds. So if, for instance, I had not been responsible with money, or there was like an issue, or I had a substance abuse issue or
Mm-hmm.
whatever, um, then that money would be managed for the rest of my life and I would be allocated like an allowance from it, right? Versus just being able to control it all.
I see.
And I don't think that's a bad thing either.
Mm-hmm.
But it is a very, it's a power dynamic that I had no control over and no knowledge of when I was a child,
Mm-hmm. Mm-hmm. Yeah.
But
Yeah.
when I became an adult and I started looking into my finances and I understood um, more of what was happening and I was working and earning my own money, it just became very apparent that a lot of mistakes had been made
Mm-hmm.
around how my money had been invested.
Mm-hmm.
And it was at that point that I decided to take a much more active role with my financial advisor in that relationship, understanding where the money was, understanding how, what the costs were every time something was traded, what the
Mm-hmm.
return on investment was.
Mm-hmm.
I also had my own money coming in because I had a job. And so I wanted
Mm-hmm.
to know how that could contribute to my
Mm-hmm.
overall wealth portfolio.
Mm-hmm.
And at that point, I was with Morgan Stanley. And the financial advisor that I had was not receptive to me as an individual,
Oh, wow.
not receptive to my questions, not receptive to my contributions, not receptive to my future.
Mm-hmm.
He
Mm-hmm.
was just sort of like, I think he was a little bit defensive because I had a lot of questions about the losses that I had taken. And he's like, well, the market, it'll bounce back. And I'm like, I'm looking at 15 years of like
Oh,
losses. Like,
wow.
none of this makes sense.
Okay.
And, ultimately, I had a really good friend who was in the Army Reserves who I worked with, but outside of the Army Reserves, he like did wealth management. Like he was
Mm-hmm.
like fantastic. And I was talking to him about and we were working the Pentagon. I was talking to him about my experience, and he's like, "You got to get away from that financial advisor." He's like, "He
Mm-hmm.
works for you. You should never feel
Right.
like you are bothering him or you don't know what you're talking about. He
Yeah.
should be responsive to you.
Yeah.
You got to get out of that relationship."
Yeah.
And so I ended my relationship with that financial advisor and that financial institution,
Mm-hmm.
because I didn't feel listened to or heard. And I think a lot of people feel that way.
Yeah.
Or a lot of people are intimidated to go to a financial advisor because they're afraid that that's how someone's going to talk to you.
Yeah.
And I wound up finding a financial advisor who's been wonderful and who understands me and who has never questioned my decisions, has definitely given me alternatives to things.
Mm-hmm. Mm-hmm.
But it has been a very different experience. And so I took over the management of all of my finances around 25, and have been operating as the CEO of my own finances.
And but you still, so it's like the CEO of your finances, but you got a minion in the financial advisor
I
who's
do.
who's making the move. Okay, got it. And
Yeah.
and so you felt like you weren't invested in the right things when you were with Morgan Stanley. Can you describe sort of what you're invested in now?
Yeah, I'm invested in about 30% in higher risk stocks that are mostly tech focused and not nascent tech, but like pretty established tech, but there's still some volatility. And then about 70% of my funds are in indexed funds. So very stable, like good year over year growth. And that's how my portfolio is managed right now. I think we talked about my 401k earlier, but my 401k is pretty like it's on the riskier end of whatever a 401k could be. So that's where I am there. So I
Okay.
think I have a good kind of mix.
Okay. And let's just chat real quick about kids. So
Mhm.
I have a daughter. She's 3 years old. I did set up a 529. Like I'm starting to try to plan for the future there. But I'm very into understanding how are people planning and saving for their kids. So, what is your situation there? How are you sort of you mentioned as one of your big financial goals. So, like, how are you saving for your kids?
Yeah, so I have investment funds set up for both of my kids. They have their own bank accounts, which we don't really do anything with. Like people will transfer money in there, and
Mm-hmm. Mm-hmm.
but the real investments are they each have an individual investment account. And what I try to do is contribute to that account on like a monthly or bi-monthly basis. So just have funds drawn from our account into their accounts to just grow that over time, with the intent of at a certain point in age, it will mature and grow, and they can use that toward their education. Or if they choose not to pursue a 4-year degree, can use that to help them start their life or go to develop a trade, whatever it might be. My financial advisor advised me against a 529 just based on my situation. But I think a 529 is a great choice for a lot of families for a lot of reasons. But just like with the cost of actual college, like having it increase over time, it's like if you're doing a couple $100s per paycheck per kid, like that's never going to cover it. You know, like you have to be a little bit more aggressive. You have to be a little bit more creative. You have to pull, larger pieces into it if you ever expect to cover, your kid's tuition for 4 years.
Yeah, I mean, I was looking at this Vanguard college cost
Mm.
calculator, and it was accounting for inflation and all these things. And I mean, it's like, oh, to go to like a sort of mid tier to upper tier university for 4 years, it's like 600, $700,000. And I was like,
I know.
what?
I
um,
know.
but yeah, that's
Yeah.
it's a crazy thing. I want to just make sure I understand. So you got these taxable investment accounts for your kids. Are they custodial, like
They
UTMA,
are.
UGMA? They would assume the ownership at age 18.
That's correct. Yeah.
Okay.
So
Okay.
our accounts with them are custodial. Our trust for all of our assets outside of that are in they have different stipulations around, age.
Got it. Okay. Um, did, did you ever feel like when they turn 18, I hope they do something good with this? Or like, do you have any fears or reservations about that? Like,
I didn't. Because my eldest child's like a perfect person and just like has a lot, like a big conscience, and she's like so sweet and she
mm-hmm,
always does the right thing.
mm-hmm.
My younger child is just like a wild card, but I think of it as, I think that I had a traditional path of graduating college, graduating high school, going to college, graduating college, getting a job, going to grad school, right?
Mm-hmm.
My sister had a very non-traditional path where she took longer. She got a GED. She went to community college. She wound up going to Columbia for grad school. I mean, she just had a non-traditional life and experience, and she is just as successful and just as,
Mm-hmm.
eh, incredible of a provider and a parent as I think I am. And so I think that there are a lot of different ways to do it. Um, And for my kids, I want to set them up for success for whatever they want to do, but I also don't want to make them feel as though they're beholden to me for anything or they owe me
Mm.
anything. Like
Mm.
to me, it's I love you so much. I want to give you as much as I can to make you successful without giving you too much, without giving you everything, which I could never give them anyway. But
Yeah. Yeah.
you know, my hope is that they make the right decisions.
Yeah. Okay. Have you ever added your kids as authorized users to your credit card?
No, I mean they're 3 and 6. That's insane.
Well,
Like for them to build credit, do you
yeah, some
mean?
people do this. Like they
Yeah,
they add their kid to
yeah.
their like longest standing credit card to get their credit history built up. I didn't know if you'd done
So
that.
I have not. So I think we talked about this earlier. My credit score is really strong. It's currently 835, and the only reason why I know that is because we are looking at cars right now,
Mm.
and car dealerships ran my credit. And I never had credit until well after college. It wasn't really until I bought my first home, which was in my or mid 20s, that I established credit. So I think it's very possible to have the credit you need to do the things that you need to do without having a credit card at a young age. And if I could advise anybody on anything, it would be do not let your kids get a credit card in college. Just don't. Like people that and I'm sure you know people like this too, Mike. Like the people that I know who struggle financially today are people that have been working their way out of debt since they were 18 years old.
Yeah, I mean, it's incredibly difficult to have any sort of financial freedom when you start from a place of
Yes.
tremendous debt. It's
Yeah.
hard to climb out of that, and you're not. I mean, just as with anything, that's like a large loan. You're paying out of it over time, and most of it is not principal. You know, you're
Yes.
it's a struggle. So yeah, it's tough.
It is
Uh,
it's very tough. And I think that most people have a lot of debt, carry a lot of debt.
mhm,
And it is, I think, crippling in terms of your financial freedom,
mhm.
the ability to retire, the ability to save. Like it's just very, very tough. So
Okay,
get out of debt would be my
I love that.
advice.
Love that
Don't have any
message.
debt.
All right, last question for you. Have you looked into any sort of like backdoor strategies, like a backdoor Roth or mega
No.
backdoor or anything like
I
that?
would love to learn more. We should talk offline about this.
Okay, okay.
I would like to describe my financial outlook as that of like your boomer dad. I mean, I am very traditional. I've never
Hmm.
considered doing a mortgage that's not like a fixed rate 30-year mortgage.
Hmm.
I have never considered um anything that is like new or like I won't like
No
sign up for a
crypto,
credit
no.
card.
Yeah,
Oh yeah.
yeah, yeah,
I mean, I'm very I'm like I'm just a traditionalist,
yeah.
but I think that that is a privilege, right? Like coming from a place where I've not had to worry about a lot of debt and I've
Hmm.
always had money to invest is
Hmm.
that's a privilege. Like I don't think that most
Hmm.
people have that. So I would say um I've not had to explore or haven't been enticed to explore less traditional means of accumulating wealth
Hmm.
over my life.
Hmm.
But I'm certainly open to it. And we have like um some of our a couple that my husband and I are very very close with, and they have three kids,
Hmm.
and they come from they grew up in Florida. My husband went to the University of Florida with them.
Hmm.
They are hyper focused on real estate. They're just like, this is how we are going to establish generational wealth for our kids. And they are buying places, they're holding places, they're figuring out how to monetize them, and they are hustling to build this for their kids because they're like, we're not inheriting anything. If we
Hmm.
want our kids to have anything, this is how we're going to do it. And that is a hustle that I'm just like, it seems, it seems like so challenging to me, but I think it's going to pay off for them. You know, I think if you are really smart and you do it right, it can work for you.
Yeah, I've been reaching out because we have different formats on the show. So like one is sort of interviewing guests and understanding their financial situation. Another is Mike and Eric kind of cover a topic in
Yeah.
finance, and then the last one is where we talk to experts, whether they
Mhm.
be in real estate or fund managers, etc. And I was actually just having a conversation with this woman who does Airbnb and other sort of short term rental stuff in Denver. And I mean, on paper, it seems very enticing. You know,
Yeah.
I know myself, and I'm high anxiety, so the thought of like having a property somewhere and then like having a tenant and always being worried about the tenant messing something up or whatever, I know I would struggle. We had an Airbnb where we rented just our room. We had a multi-bedroom condo, and we just would rent the spare room, and people would fuck shit up like
Yeah. People are terrible.
all the time. And like I'm there. I'm like I can hear you. I can I can see you. You're like doing crazy things. So I don't know if I'm built for it. I think I've been much more focused on. I just don't think there's anything more passive than having wealth built through investing. And
Hmm.
the key ingredient is time.
Yes.
And my kids for sure have a ton of time. So my
Hmm.
thought is if I can set them up for starting today
Hmm.
on this sort of wealth building journey, like I think that's sort of my version of like property and real estate plays,
Yes.
and and to me it just seems like an easier, much more straightforward path, a
Hmm.
lot less
Much less
hustling.
risky. Much less
Yeah.
risky. Yeah. No,
But yeah.
you're absolutely right. But that is, I mean, it's a privilege because both you and your job have like high paying jobs that are pretty stable. Like if you know, and I think that that is the way that like I'm doing it. It's the way you're doing it. But
Yeah, yeah, yeah.
yeah.
All right. Well, that's awesome. I listen. I think this has been great. I really appreciate you taking the time to share your financial journey. I actually think a lot of people who are going to listen to you will find what you've said very, very helpful. Um, I I've talked to a lot of people, Emily, and uh, I had this. I think I had a very myopic view of finances. Like I know what I do. I have, several friends that I would talk to about finances all the time. And I think I just assumed that like everybody handled their finances similarly to how we were all handling our finances.
Hmm.
And it wasn't until I started doing this that I've started meeting a lot of people and seeing the variation and sort of the deviation from what I thought was the norm. But it's just that people handle their stuff way differently.
Hmm.
Um, and so in listening to you, I it's like I think you're probably one of our more seasoned people that has come on here at this point.
Because of my
Um,
advanced age. I get it. Bye.
not in that sense. Just in terms of your financial journey,
Hmm.
you've got multiple properties. You have been investing for a long time. You've done some significant withdrawals from investments. You've done some more fine tuning of your investments, and you've taken a lot of interest in exactly what your portfolio is and isn't. So you just have, I think, a little bit more maturity in your financial journey, and I think people can actually take away a lot from that.
Oh, well, this has been so fun, and I think you're just incredible in every way. And I'm so happy that you're doing this. I'm sad Eric's not here.
I
But
know, me too.
um I love that you're doing this. I think that the whole idea of demystifying finance and being honest about it, and we live in this world where you think everybody makes good money and everybody is financially secure, and you can make a ton of money and still have months or weeks or years where you're feeling like, oh shit, like I don't have
Hmm.
enough. I don't have enough to cover what I thought I did.
Yeah.
And that's a human experience. And I'm glad that you're kind of like creating literally a safe space to do that.
Yeah.
So thanks for inviting me. And I hope that you continue to do this and have a lot more amazing guests. And I can't wait to see what you do with it.
Thanks, Emily. All right.